What's up, everyone? It's Scotty with Money Investing. A really strong day for the markets. We did get the unemployment insurance numbers. We did have the ECB, the European Central Bank press conference, and Christine Lagarde raising interest rates by another 50 basis points. We had a whole live stream about that as well. And of course, markets rallied quite a bit. Euro stocks reversed, yields also reversed, went back higher. And we had a big influx of liquidity in the tech sector, growth sector, doing really well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us and getting access to all the trade ideas and trade alerts as well. So we had a trade idea on Google. Google did really well yesterday, pushing up a little bit over 4.68%, getting up to our target of close to $100. I sent out updates in our Discord, just making sure everybody is locking in profits when they need to. So very strong move. This right here is going to be Vertex Pharmaceutical, up another 2% on the day, pushing further into our green zone, profitable zone, pushing past $300 per share. And I took another trade on FAS today. Got in a little bit late because of the live stream, was not able to get the best pricing, but still got in at around $55, and now it's starting to push right back up, reverse a little bit back up over 5.77% just today. So again, if you want to get access to all these trade ideas and alerts and options alerts and all the private videos as well, the link is going to be down below. Would love to have you on board. We've got a little bit over 3,700 members talking about fundamental analysis, technical analysis, macroeconomics, stocks and options, charts, cryptos, real estate, economics, you name it. It's covered. Everything is going to be there. So link's going to be down below. So moving forward, this is going to be the unemployment claims, in other words, jobless claims. And we came in at 192,000 for this past week, a little bit shy of what the consensus was and lower, 20,000 lower than the previous week, which again shows and goes to show a little bit of the strength of the labor market in the US. This right here was the monetary policy. The European Central Bank, once again, the governing council today decided to increase the three key ECB interest rates by 50 basis points. And in making sure its determination to ensure the timely return of inflation to the 2% medium-term target, the elevated level of uncertainty reinforces the importance of data-dependent approach of the Governing Council's policy rate, which will be determined by its assessment of the three things that they mentioned: the inflation outlook in light of the incoming economic and financial data, the dynamics of the underlying inflation, and the strength of the monetary policy transmission. Those are the three things Christine Lagarde mentioned, and there were a lot of questions. I've kind of broken that down in my other video, so make sure that you do check that out if you haven't already, get a good summary of what was discussed in that meeting. So the UK is now banning TikTok on government devices. Following the US move, Canada, we already know, has also banned TikTok on government devices. And we also had New Zealand banned TikTok on devices linked to Parliament as well. Literally came out 4 minutes ago, so this is again fresh news. And again, TikTok really starting to get a lot of criticism and a lot of potential pushback from some of these countries. We, in the last year or so, we've had the US, of course, India has banned, China, even China has banned its own application, and then of course we've got the United States, Canada, the UK, and now New Zealand banning it on government devices. So we'll find out what happens with this moving forward. Meta obviously is benefiting from all of this. Treasury Secretary Janet Yellen says not all uninsured deposits will be protected in future bank failures. So she was talking today, and she mentioned that the government refunds of uninsured deposits will not be extended to every bank that fails, only those that pose a systemic risk to the financial system. Really important line here, that pose a systemic risk to the financial system. And we've talked about SIBs as systemically important banks. In fact, that's one of the reasons why I have a long position on FAS in the first place, is because it's got more systemically important banks, SIBs, as opposed to anything else. It's got some of the bigger banks, some of the larger institutions that are too big to fail, and that's when the government and the Treasury Department will step in if we get into an unfortunate event of some of these SIBs failing. But when it comes to smaller regional banks, medium banks, I doubt that the Treasury Department is going to continue with this unlimited support. So that's a little bit of clarity there. And that still poses the risk for regional banks and some of the more smaller, medium-sized banks, which don't necessarily pose a threat, But yes, it's gonna be pretty unfortunate if we continue to see bank failures and of course they're not being supported. But that's also FDIC's limit, right? FDIC has a limit of 250,000 on most bank deposits, but they're making an exception to these systemically important banks, or in other words, SIBs. Yellen has been at the center of emergency program to refund billions of dollars in uninsured deposits held by clients at the failed Silicon Valley Bank and the Signature Bank. But with the markets recovering somewhat, lawmakers were concerned those backstops could become a new norm for big banks, giving too big to fail banks an unfair advantage over community lenders as well. So definitely, I mean, systemically important banks are the ones that do pose a systemic risk to the financial system, and they pretty much mentioned that it'll be extended to those companies and banks at the moment. So this right here was the market breadth. Dow Jones with 23 advancers and 7 decliners. We got the S&P 500 with 413 stocks pushing higher, with 77 pulling back, and in the Nasdaq we had over 2,200 stocks pushing higher with 1,000 declining. So it was a very, very green day. So we had Amazon, Tesla, Meta, Google, Microsoft, Apple, Nvidia, AMD on a complete rocket ship here. Adobe pushing higher, as well as Oracle. We had a little bit of financial sector recovering very nicely. Healthcare, industrial, energy, materials, utilities, semis. I mean, you name it. It was like buy, right? That's what it was. No concerns about anything else. Just simply buy, and that's what happened in the markets. Just everything pushing higher. Staples, in other words, consumer defenses, was the underperformer along with healthcare. But those were the only two sectors that kind of were down, but everything else is straight up pushing higher. So consumer defensive and real estate a little bit pulling back. Everything else really pushing higher, especially technology and comm services. A very, very green day for them. Over the last 1 week, it's kind of like a split market, where we've got comm services, tech, and utilities pushing higher, with financials, energy, and materials pulling back. And over the last 1 month, we've got most sectors down, only comm services pushing higher slightly. Lumber prices green, coffee prices, cocoa, palladium, wheat, sugar, silver, and orange juice. Then we got lean hogs with a big sell-off here. Bitcoin's back over 25,000, and we've got Ethereum a little bit under 1,700. And this right here is going to be the Fed funds futures. The only concern that I addressed in my other video is the assumption the market's making with so many cuts and so much quantitative easing, right? Because the market is anticipating that starting June of this year, the Federal Reserve is going to start on their aggressive cut program, right? Aggressive cuts, because we're pricing in close to 6 cuts right now. 1, 2, 3, 4, 5, 6. 6 cuts is what the market is pricing in, of 25 basis points each, going from June all the way through July of next year. That's about 150 basis points of pullback from the Federal Reserve in terms of interest rates, and for us to eventually sit down as low as 3.5 to 3.75%. That's the only concern I have. Look, if the markets were rallying on expectations the Federal Reserve was going to keep rates at a steady level, then I would not have like any issues with this rally. But right now, I think we're seeing a lot of short-term momentum come back in, despite the Federal Reserve not giving us any clear green lights as to what they're going to do. We're going to find out next week. But as we just learned from Christine Lagarde, they're staying the course. They're making sure that their fight towards inflation is steady. They're making sure that they're not blinking here. They're not going to tap out just because Credit Suisse started to fall. And I think the same tone can be heard from Jerome Powell next week, kind of making sure that, they stay committed. They come across as being committed to inflation and the fight to inflation, and raising rates here in the future. But of course, not tapping out just because Silicon Valley Bank or Signature Bank started to fall out. Now, the fallout in the U.S. is much bigger than that over in the U.S., in Europe, in Switzerland, and Credit Suisse. But that being said, I do think the Federal Reserve is certainly, in my opinion, is not going to go for 6 cuts as the market's pricing in. But let me know down in the comment section below, what do you think? Moving over to the markets, and another thing that I wanted to point out is that First Republic Bank is getting $30 billion in deposits from 11 major U.S. banks, but stock resumes slide as it suspends a dividend. So that's another really, really important thing. And also, don't forget, we also have the quadruple witching Friday tomorrow. So the T-Vol index is going to be set to explode to the upside. So US stocks set for a wild swing as trillions in options contract set to expire on Friday. So again, this happens on every third Friday of March, June, September, and December. And again, tomorrow we've got options contracts worth $2.8 trillion set to expire during Friday's quadruple witching event, according to the figures from Goldman Sachs. And quadruple witching, as known, happens when equity futures, options contracts tied to individual stocks and indexes, as well as exchange-traded funds, all expire on the same day. So you may find the T-Vol index, which is the total volume on the New York Stock Exchange, spike quite a bit at this very, very large number. So be very careful in terms of the volatility for the markets going into tomorrow. So speaking of the volatility, VIX was down 12%. So we have seen a lot of back and forth here, green, red, and then coming right back down under 23. So pulling right back down, and the next support really is going to be 19 to 20 levels for the VIX. Crude oil prices getting a little bit of a bounce back higher. So this right here is going to be that support. We talked about that next support being at $65 a barrel. A couple times we've gotten down to that level, validated, and then pushed right back up. And right now it's trading a little bit over $68 per barrel. And this right here will actually turn into a resistance for crude oil moving forward. So this right here is going to be that level. Pretty good breakdown. Down about, I think, 6 to 8% on the month here in the month of March. And right now just stabilizing at that support once again. Ethereum, on the other hand, is fighting that resistance at close to 1740, 1700, around those levels is going to be that resistance for Ethereum. And right now we're just kind of consolidating sideways, getting rejected at that level. And then for Bitcoin, we're starting to break back above that 26,000 threshold. So right now starting to break back above this level very, very nicely for Bitcoin. Talking about the 10-year yields, so going over to the yields, we are seeing a little bit of a push back up. 6-month is back above 5%, the 3-month 4.7, 1 year is back above 4.6, and the 10-year is back over 3.5. We actually came down to as low as 3.4-ish something, but it's now starting to push right back up, and the 20-year is back over 3.7.5%. So a little bit of momentum back up in yields as bond prices came down, as liquidity kind of flocked away from bonds over back to equities, especially very risk-on equities. So what we have really seen in the last 4 days, I can summarize in just a couple words here. Risk on, risk off. That's it. Those are the only 2 words. Pretty much it's been Monday, risk off, risk on, risk off, risk on today. Right? So that's what we have seen. And then, of course, tomorrow's the quadruple witching Friday. We'll see what happens with the market. But going over to the S&P 500, what we are really seeing is a very, very nice green candle. Buyers are stepping right back in. This right here was a decent pullback. So we came down a little bit over 8.7, close to 9%. And now we're starting to see some buyers step in. We didn't quite come down to 37.74, 37.75. This right here, very, very strong support for the S&P. Didn't quite come down to that level, but now starting to see some buyers step right back in for the S&P 500, and the next resistance really is going to be all the way up to 4,100. I wouldn't be surprised if we do get a retest up to 4,100 for the S&P. That's actually not that far away, 2 to 3% away from those levels. 4,000, we're already here. 4,100 is going to be that next target. And of course, we got the Fed meeting next week to see how the markets react to Jerome Powell's speech. The NASDAQ here, very strong move, right? 2.5%. Next resistance really is going to be staying put at roughly around 12,280, so kind of in line with this resistance, and that's also only 4 to 5% away for the NASDAQ. We came down a little over 9-10% from the recent peak here, and now starting to recover very nicely after getting tested and supported at that previous resistance from January of 22. So that's that lower high, came down, validated that old resistance as a new support, and now starting to push right back up. So 12,280 is going to be that next resistance to watch for NASDAQ. Talking about Apple, and Apple here pushing higher very nicely, up over 1.87%. We're still in the context of this consolidation here. So you can kind of see like a very, very small inverse head and shoulder. So this right here, if this was the neckline for Apple, you can kind of see this left shoulder head and then a potential right shoulder, right? Very, very small pattern, but it is noticeable. And if the neckline is going to be over here, it's not unlikely to see a potential breakout to the upside past $157, $158 per share. Something to definitely be watching for Apple as we get up to 157, 158. That's going to be that next resistance to watch for Apple. Talking about Amazon also on the move, up almost 4%. So very nice, break to the upside here. Next level is really going to be 108 to as much as $109. So we got a resistance sitting right there for Amazon, still in the context of this lower high and lower low. So this has happened so many times, but we've obviously seen the markets roll over, and so did Amazon. This right here was a very strong rally. This right here was a very strong rally. So again, we're seeing another very, very strong rally coming in for Amazon. It's not until we break past this lower high, so this red line that you see, it's not going to be until we break past that level, then I would be confident that, okay, Amazon is now starting to shift that overall trend back to the upside, and we're actually seeing some momentum back up, and that's going to be a resistance sitting roughly around 115. That's a previous high that Amazon needs to break above in order to get some momentum to the upside. Tesla, on the other hand, 184, pushing up a little bit over 2%. So again, we've got a support sitting roughly at 175 to as low as 165. So Tesla here getting some nice buyers to step in. The volume was decent, a little bit lower on the volume side, 121 million shares traded only. But that next resistance and target's going to stay put at $202 per share for Tesla moving forward. So if it does get up to as much as 185, even as much as $200 during the day, I will be looking at potentially selling some covered calls once again to hedge on the downside and also collect those juicy premiums that Tesla usually has to offer. Next up, we've got the winner of the day. I can't even. NVIDIA up over 5.4%, starting to break out from this higher high. And we briefly talked about, right? If the sentiment and the momentum takes it to the next level, then it's not unlikely for NVIDIA to continue to push higher. That's one of the reasons that even though I believe NVIDIA is overvalued and overbought and that there's negative divergence, this is one of the reasons I haven't really taken a short position or even addressed this in our Discord as a short position, because the sentiment is so strong. The momentum is wild on NVIDIA. That's one of the reasons why this becomes a lot more risky to trade, because you'd be trading against the trend, right? We've talked about this before, but NVIDIA here with a very strong breakout at the upside. Next level is going to be 292. And NVIDIA is not that far off from its all-time highs. Like, I have no idea what's going on with this company in terms of valuations. It's only 35% away or $90 away from its all-time highs. Absolutely crazy how much it's gone up, like in just in the last few months here. And of course, 292 is going to be that next level. Wouldn't be surprising to me if it gets up to that level, it gets another 13-14% upside. But the divergence continues to play out. We're just getting even more overextended to the upside for NVIDIA, and the valuation just keeps on getting more and more risky. One of the things that you always have to remember, and by the way, the market cap just crossed over 630 billion. If you compare 630 billion to 27 billion revenue, 23 times sales. One of the things that you always have to remember in the markets is as prices go up, so does your risk, okay? As prices come down, so does your risk, right? Price and risk are both positively correlated. They both move in the same direction. If buying NVIDIA at 255, is it getting less risky or is it getting more risky? It's obviously getting more risky, right? Because the stock's already made the move from low 100s to 255s. It's already gone up 133%. And how much upside does it have to give, right? The remaining upside is not worth the potential downside there. So obviously, as price moves up, it becomes more and more risky. The price keeps on going down, it becomes less risky. And of course, you have to do other analysis as well. It just doesn't mean that you can buy any stock there. I mean, if it's going down, it's less risky. No, you have to do additional analysis and research. Of course, find out the quality of the company, what it does, what's the financial statement look like. Like, all those things still need to be considered. But I'm just telling you, from a pricing and evaluation standpoint, the lower it is, the less risk it carries, just from a valuation and a pricing standpoint, as opposed to something like NVIDIA, which just keeps on going higher. It's starting to kind of pile on more and more risk on top of it. Advanced Micro Devices, also with a very strong breakout. I mean, up over 7%, getting up to $96. I actually sold a covered call on AMD today. So the premiums were fantastic. And this right here is the higher high, which we talked about in our previous video. So that's the higher high and the higher low within which AMD has been trading at. So one thing you'll notice with AMD and NVIDIA is that they have both traded outside of their downtrend. They've both broken out of their previous downtrend, right? That's why the momentum is so strong for them, right? That's why Amazon's only up like 4%, 5%, as opposed to NVIDIA and AMD up like 6 to 7%, is because they're already starting to break outside of their downtrend. A lot of the stocks like Apple and Amazon and Tesla, like a lot of them, are still trading in this downtrend. Even the NASDAQ is still in this downtrend, right? We're still in the context of this downtrend, what we're really seeing today is a rally within this downtrend. But with AMD and Nvidia, they were in this downtrend, but what happened was they actually broke out. Now they're in this uptrending channel where they're making higher highs and higher lows, right? Same thing with Nvidia, same thing with AMD. That's why the momentum is far more strong than compared to something that's trading in a downtrend. So AMD, very strong move. RSI overbought now at over 74, so be careful. We're getting up to that higher high for AMD as well. Talking next about PayPal, and PayPal here on the day was up a little bit over 60 basis points, so lots of consolidation sideways. Support level and my fair value is going to stay put at roughly around $70 for PayPal. And of course, we got a resistance sitting roughly at $79 to $80 for this company moving forward. Talking about Square, and Square here on the day also up over 1.3%, pushing higher, but a red candle on a green day does suggest there was some bearish sentiment intraday. It was pulling back, but the next resistance and target is going to stay put roughly between $83 and $89. So this right here is going to be that level to watch. And if and when it comes down to low 50s, I will be very much interested in a potential opportunity for Square moving forward. Talking a little bit about Meta, and Meta Platforms here was green very nicely, up over 3.6%, breaking past $204. So very nice momentum back up. We'll go ahead and turn this level into a support at roughly 198. And the next target is going to be $222. So this right here is going to be that resistance to watch for Meta moving forward. That's going to be that next level. Talking about Netflix, and Netflix here also recovering a little bit, pushing higher up 2%. We talked about this in our previous market updates for the last few days. We've been talking about how oversold it is. It's not unlikely for us to see a bit of a reversal there. And RSI MACD also starting to move right back up. So it's a very good potential trade opportunity on the long side, considering that we are seeing a very oversold chart for Netflix, and it's starting to move back up. So the resistance is going to stay put in the 350s, 360s for Netflix in the future. Talking about Microsoft and Google here, we'll just take a look. But Microsoft here with a massive move, 4% on the day, 276. And next resistance and target is going to be at 292. So this right here is going to be that level to watch for Microsoft. We have gone rejected at that level quite a few times, and it's now starting to really break outside of this downtrend as well. So Microsoft in a very similar situation than Nvidia and AMD, also starting to break outside of these downtrending channels once again. Google here, also very nice reversal. It's still in the context of a downtrend, so you can see that it's still making lower highs and lower lows. That's the difference there. But Google here also with a very nice move, 4.6%, and the next target really is going to be this level at 104. So 104, 105, that's going to be that level for Google. If you get a breakout above that level, very, very good. We're starting to kind of change that direction, change that trend to a higher high and higher low for Google as well. And last but not least, we got Shopify, and Shopify moving higher, up over 2.6%, getting still validated at this higher low. We've got a gap to fill on the upside, sitting roughly at 46 to as much as $49, $50. I do like Shopify as a company, but not the valuation, so I would be a lot more interested for a potential long swing trading idea, roughly $29 to $30 for Shopify moving forward. So hope you guys enjoyed this video and a complete update on the markets. We had a lot to unpack, but ECB coming in with a 50 basis point hike, staying the course for inflation. The market definitely is anticipating a lot of cuts in QE from the Federal Reserve. That's the only concerning part for me personally. We'll find out what next week Jerome Powell is all about and the Federal Reserve in terms of rate hikes and the dot plot and the SEP. But we got to enjoy today. Very, very strong green day. So I hope you all have a fantastic day. Make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us and getting access to all the trade ideas and alerts and everything else as well. Happy investing. I'll see you all in the next video.